Okay, welcome everyone. In this video, I'm going to cover the gold mining stocks, the gold miners, and we're going to dig into what I think is providing a decent value and good trade setups in many of these miners. So I want to cover a video that just goes into all the different gold miners that I'm currently looking at. And, why, before I get started, why do we cover why is the gold miners even an important sector? Why even look at the gold mining stocks? And from my perspective, it's an anti-dollar play. The thing is that the dollar has been dropping, so we want to look at what should go up in value as the dollar falls. So when we talk about the gold miners, we've got to start off by looking at the dollar. So right now I've got the DXY chart up. This is a dollar currency pairs trade ETF basically, or index, and it basically is tracking the. It's not an ETF, but it's an index. It tracks, for the most part, it tracks the dollar against the euro. So is the dollar falling against the euro, or is the dollar rising against the euro? The yen's in there, and there's a few others, but for the most part, it's the dollar euro. And so we'll start off by looking at this. We're going to look at the longer term picture just to give kind of the longer, bigger picture view. So this is going back all the way to 1987, and you can see the dollar has, really, it's held its ground. There's periods of big downdrafts and periods of big updrafts. And just in general, though, we're still relatively stable over a period of time. However, this big draft from 2002 all the way up to 2008 had huge, huge implications for the gold mining stocks and gold in general. So that's what we're looking at, is what's going on. Are we going to get another big downdraft in the dollar, something like this, over the next, 5 to 10 years? And if so, the gold stocks really should benefit. Zooming in closer on the weekly chart, you can see here on the dollar, the DXY, we had this clear uptrend trend line here, and it has lots of reactions, lots of confirmations, and we recently broke that. Trend line right here. So it was broken here, and we've been selling off ever since. So that's kind of your bigger picture. Is there is a major trend line has been broken. Let's just put it that way. So that means we have likely started a new trend in the dollar to the downside. Now this is a weekly chart, so this is something that's going to play out over years basically. So now we'll zoom into the daily chart. Gives us a little more acute look at the time frame and at the chart. And basically we had this bullish falling wedge pattern right here. I have it marked out. And then we have bullish divergence, which started to show up in the dollar recently. So here's your bullish divergence, where you made a higher high in the momentum. You can see it on the PPO and the RSI on this daily chart. And then we continued to make lower lows. So I circled that divergent low price action. That was the area where it signaled a trend change was likely. And we did get that trend change. So you can see we did break to the upside and moved all the way up to about 91.50 so far within this uptrend. Is there more to go? Well, for that, we got to kind of look at a smaller time frame. But as of right now, you can see momentum is still moving higher, and price is, kind of just hanging out sideways. So we could easily be moving up to this 92. Let's look at the hourly here. Now on the hourly, you can see that we basically have a support area, which is right about in this area right here at about 90, and that is the area that I would expect if we break to the downside and can sustain that breakdown, then that means that this upward move, this is all there is, and we're likely going to resume the bigger trend, which is down. So on the longer time frame, the dollar looks to be trending down. On the shorter time frame, We did have signs and signals that we were going to get a trend change. We did get that trend change, but now we have to determine, is this all there was? You know, a move up to 91.5. Is that all there was in terms of a trend change? And now we're going to resume. It's undecided yet at this point, because you can see we're just kind of sideways. We still have on the shorter time frame some bullish momentum. So I could see us moving up to the 92 area. I think it's likely we'll get rejected up around that 92 area. But again, we have to watch that. And then a break below 90 could signal that we're going to head lower. Okay, so now let's look at gold. We'll use the GLD chart for this one. I often cover gold bullion. The GLD is a ETF that tracks the price of gold, basically. And it has the same kind of setup, but I can chart it fresh. You can see here on the GLD, we'll start off with the daily. You can see that since basically May of 2019, really since 2015, this is the bottom of the bear market in gold. So gold was in a big bear market going all the way back to the highs of 2011, all the way to 2015. So, you know, a 4-year bear market. And then it changed trend. Now, the trend starts out slowly. So you can see here, you know, it was continuing to make higher highs, or higher lows and higher highs. Here's a higher low than the previous low right there, which was higher than the all-time low, or the low of this of that bear market. So we're trending up, and then the trend actually kicked into gear and has steepened its angle. So clearly we're in an uptrend. Gold is in a bull market. That is undeniable. Now that can change, but as of right now, that has not changed. Technical posture of gold is a bull market. So when something's in a bull market, you want to buy at support. As long as the technicals don't start to set up bearish, indicating a trend change is likely, then you want to buy at support. And I don't see any technicals that tell me that we are going to, that this bull market is going to change. So now we zoom in on the well, no, we'll leave it here on the daily. But you can see this uptrend. So this is the trend line that I have as of right now. Now I only have 2 data points. And as I teach in my course, link is in the description below if you're interested in that. You need at least 3 data points to make a trend line. So I only have 2. So I can't say with certainty that this is a trend. I just have it marked out in case we start to get reactions around this level, then it could mean that this is the trend. And we're getting very close to that. You know, it's just down here at 162. Very close. From where we're at now, that's a drop of about another 2 to 3%, depending on when we actually get there. So very close. And that's why I want to put this video out, because I think we're at the point now where if we're going to be continuing this bull market, we are in the area to be buying gold. On this daily chart, you can see that I have bullish divergence right there on the RSI and the PPO. See how the momentum is not making a new low? So right here was the low, and recently we came down. This was not a lower price, but here we dipped down, undercut that previous low in price, right here at 165.87. We made a new low at about 165.70, just a slightly new low, and yet momentum was higher than the previous that previous low. So that's bullish divergence, and you can see here on the RSI as I zoom it in, you can see here how it made a new higher low, and it's starting to turn up right there. Okay, so if that holds and we start to bounce in this area, and I think it's likely we're going to get a bounce. We could bounce and then continue to put in slightly new lows, maybe hit this trend line over the next few weeks or so. That would potentially still keep that bullish divergence intact. So look for the bullish divergence to remain intact. That's one of the key things I'm looking for is, do they burn through the divergence, or does it stay intact while we trade around these areas, making slightly new lows, but keeping that bullish divergence intact? And so for me, while this continues to set up, this looks like the buy area. Another thing to point out on this chart, and then we'll get into the gold miners, is going all the way back to 2011, you'll see that this was the resistance line back in the last bull market. So the bull market really fizzled out right here. Yes, you overshot it a little bit, but the overshoot is just the impulse. That's the momentum trade that just will carry over levels oftentimes before coming back in and then establishing a resistance line or a valid trend line. And so here's your trend line right here. That was key resistance. It's about 174. It's about 174. And recently, when we shot above that right here at 174, we had an impulsive move higher. That is a breakout. So that's confirming breakout right there. You can see also, look at the volume down here in my volume indicator. As we broke out, volume was really starting to come in and increase. So we got an increase in volume as we started to break out. That's confirmation that that was a breakout. So, you know, after it broke out, you get the back test. You know, that's very often, that happens all the time. When you get a momentum overshoot or some sort of a momentum breakout, everybody piles into the trade, and then you have to shake out the weak hands. And during this time, I remember hearing that the GLD was one of the top traded ETFs on Robinhood, and it was just a retail trade, mania trade. So again, when you start to see that and everybody's piled into one side of a trade, you got to shake those people out. And that's what all this price action, I believe, has achieved. It basically, if you're a momentum trader, this is really hard to ride through. So, all right, so now that we've established that we're in an uptrend and we had a breakout, we're looking for continuation of that trend. And to signal that, we're looking for bullish divergence, which we do have. We're looking for that to hold and kind of build a base, and then we'll see the continuation of the trend, which will be to the upside. All right, let's start out with Agnico Eagle, AEM. These are gold miners. And I'll try to rifle through these a little bit faster now that I've kind of established the premise to this video. So AEM rolling out, we're looking at a daily chart. Going back to 2011, you can see once we were in that bear market in gold, AEM really just struggled, and it just held this level, this area basically as resistance. So this was a former key resistance area. It really runs down to about 5803. And up to about 6250. You can see 5803 was key resistance here. We overshot it a little bit here, but it pretty much held in that zone. And then here it held as well. It was pretty much key resistance right here. And then we broke out. So once we broke out, we broke out here, back tested, it held, and then we actually broke out, and we've been above that level now, so that should hold as support. That was key resistance, now it should be key support. And because it's a zone, I've got it kind of marked out right here. We're trading down into that zone right now, so this is where support should be at. So I've been personally building a position in this stock, in this miner, looking to continue to build. If it runs down to this 57.80 area, I'll add. And if it breaks below, I'm probably not going to add below. So any break below, and I'm not going to be adding anything below. I'll likely just be watching it to see if it can recover, which is what I would expect. On the RSI, we do have bullish divergence. Yeah, it's just barely there. So I'm looking for that to hold. It doesn't have to, but I'm looking for it to hold. That would be encouraging. And then on the PPO, it's clear bullish divergence right there. I'll zoom that in. You can see right there. So we're making new lows in price, and yet the momentum is higher on both the RSI and the PPO. So bullish divergence. I'm looking for this to start to turn up and hold this support. Here's this is a silver and gold miner, Avino, a very cheap one. It's basically a penny stock, but you can see uptrend line here on the daily. So this is just a bull market trend line basically. we're coming down to that support line around 122. That should hold. We had this huge overshoot right here. That was the short squeeze mania fake out move that happened, and so you just throw that out. That's just a scratch. In general, we have this uptrend line, so we're watching that. There's no bullish divergence. There's just bullish momentum. You can see momentum continues. If I can get my line tool, it's just upward momentum and upward price action. So I don't see anything signaling a change in trend at this moment. All right, BTG, B2 Gold Corp, another kind of a junior miner, I think. And basically, here's what I got on this one. This is going back to January 2016, so this is the end of the bear market in gold. And we basically have established a trend line now. We have a couple reactions. We've got the low, we've got one there. We've got the COVID drop, which it did undercut, so we just have to kind of scratch that, throw that out. That was forced liquidation, a forced liquidation event. And now we're coming into what looks to be like the trend line that has been established. We also have horizontal support right here. You can see this one. Really, it's just this reaction area here, and we had a reaction here. So you ran up, hit resistance, got the reaction, came back up, broke above, and then held and tested that as support for a couple months basically. And so that's nice confirmation on support. We came back down, we're testing it some more. Now we're undercutting it a little bit, but again, this is what I'd expect to see around a major support level. Undercut, run some stops. This is the kind of move, if you see the recovery of this 488 level, what I'd look for is a recovery, start to hold, and then likely we're off to the races to the upside. On the RSI, bullish divergence, and on the PPO, bullish divergence. So we have bullish momentum on the momentum indicators, bearish price action in the short term. I'm expecting this to hold in this area, although we could gap down and then pop higher, but I'm expecting some price action that tells us we're going to hold in this area. Again, a recovery of that 48 would mean that this is a false breakdown and we're likely off to the races. Franco-Nevada, this one doesn't have the same technical setup as some of the other ones. They don't all have complete bullish price action, but some of them do, some of them don't. Gold in general does. So Franco-Nevada, downward price channel on the daily chart. And we now have we have downward momentum as well. You can see here it is like that. So bearish momentum on the PPO. I think that's on the Yeah, that could be a divergence on the PPO if it turns up. The RSI has burned through that, so bearish momentum on the RSI, bearish price action on the price chart, and we have this channel to watch. So that's something I'm watching. Also, there's the major support. If I roll out this one, yeah, it's got a couple reactions down here. You can see all the reactions. There's a couple there. There was a couple there. There's one. The COVID drop stopped right there at that one. So there's major support. Do we come down? Are we going to continue to trend down till we hit that? That's possible. So I'd be, this one I'm not buying. I'm just continuing to watch it. If we start to get down in this area and start to put in bullish divergence, it'll probably become more interesting. Otherwise, I'd look for a break of the upper end of this price channel, a breakout to the upside. As of right now, bearish price action, bearish momentum. GDXJ, all right, so daily chart, this is going back to 2013. You can see this level right about 52, it's about 52.40 or so, was major resistance for many years. And it held the resistance all through here. We then had a breakout, so there was a breakout of that resistance line, and now we're coming back in to back test it. Now we're below it now, but we're still in this area. We're still kind of hanging out. We're not just completely collapsing. So watch for this to turn up. It doesn't have to. We could break down, but as of now, I'm starting to see in the RSI bullish divergence on the RSI and the PPO. So let me zoom that in. You can see here we're making higher lows in the RSI and a slightly lower price. So that's bullish divergence. That's the first time in this downward price action right here that we've had bullish divergence. You can see we continued to make new lower lows, but we continued to move lower in the momentum. And now we have bullish divergence. So look for that to stick. Doesn't have to, but you know. And then what I would look for on this one is a recovery of this level, this 50 to 40 area. If we can bounce back up and recover it, then I think it's very likely we're going to break to the upside of this downward trend line, and off to the races we go. All right, Barrick Gold. So Barrick Gold, one key thing, development this week on the RSI, we burned through that bullish divergence. So zooming in, you can see negative momentum there on the RSI where we continue to make new lower lows. Negative price action, obviously in price. The PPO looks a little bit different. We still have bullish divergence here on the PPO. That could be burned through if we're going to continue lower. But as of right now, it remains. And we have this bullish falling wedge, if my trend lines stay. Bullish falling wedge right here. So we've got a couple reactions, 1, 2, 3. Now looking for this to turn up to confirm this reaction. And then on the top, we have several reactions here on the daily chart. So bullish falling wedge, bearish price action, and kind of a split momentum indicators. One's bullish, one's bearish. So this one's still a little undecided. I think it's likely we're going to hold in this area. If we don't, then you can scroll out and see that we have all the way coming off the 2015 lows. This is the bull market support line in Barrick. And we had a reaction here in 2018. The COVID drop stopped right there at 1252. And that's the major bull market support line. So it is possible that Barrick is going to work its way lower all the way down to hit this major support line. I would expect that to hold down here, but it is possible that Barrick's going to head down to 15. So something to keep an eye on. Obviously, that's a pretty good size move. That would be a drop from where we're at, depending on, of course, when we get there, of another 20%, we'll say. And from the high, that would be a drop of about 50%. So pretty good size drop if we're going to run down there. I'm not so sure we're going to get down there. I think it's likely, given the setup in GLD, that Barrick does turn up here and we continue to move higher. And we'll test this trend line maybe sometime in the future. I'm not so sure it's going to happen right now. Here's another one, HMY, Harmony Gold Mining. So really going back to the daily, looking at 2013. This, now these small priced ones, they can kind of slice through levels. The levels oftentimes aren't as crisp and distinct, just because when these things run, they carry a lot of momentum with them, and when they fall, the same works to the downside. So we have what I call kind of an area of about $4. It's about $3.75 up to $4, kind of a wide area, and that held as resistance all through that time. You can see through here we kind of held as resistance, so confirmation that it was resistance back here, and then we broke, and that's a nice impulsive breakout. So nice impulsive breakout. We did have increasing volume right there. The volume wasn't crazy, but it was definitely increased volume from kind of the average volume. You can see this is kind of your average volume, and you had some increased volume. So nice confirming breakout. And then you run down and do the back test of that breakout. So oftentimes momentum moves are faded, and you're going to retest that breakout area. And that's what I think we're doing right now. So as you zoom in, you can see gold, was up on Friday, and some of the gold miners were down. This one was up about 2.4%. And we did hit that bottom of that area, about 375 or so. So again, in a support zone, what I'd be looking for is, we could chop around here for a little bit, but I'd be looking for this to hold and then start to move higher. Looking at the RSI, we did slightly make a new lower low in the RSI, so that has burned through what was bullish divergence. PPO does have the bullish divergence still intact right there. So kind of a split split indicators on the momentum indicators. Here's one, Iamgold. Basically, you've just rolling this one out. You've got, you got this kind of trend line equilibrium point. It's about 330 or so, and it was resistance back here. We broke above. It held the support several times there, and then we kind of sliced through it a little bit. But we did hold support right through here and through here, and we really held support all through here as well. So it's at the area where I think this one's likely to have some sort of a reaction or a recovery and a bounce. And if gold wants to make the next leg higher, these things are going to bounce above these highs. You're going to get above this $5 range, probably making moves above $7. I mean, you're going to, I'm expecting the next leg higher. So this one, again, low priced. So you have to, with these low priced ones, I take smaller position sizes. They're very volatile. So again, adjust your position size accordingly. I teach that in my technical analysis course. That's one of the courses. And so again, this is a smaller position size because it's much more volatile. First level of resistance, just to mark that out, is probably right there at about, down a little bit, right about 397. And again, I wouldn't be interested in, adding or buying this if it continues to the downside. Most of these gold miners are at or near support. So a little more downside's okay on some of these, but for the most part, this is the area of support that I'm expecting to hold. That's why I'm putting the video out right now. Anything continuing to the downside, and it's likely you want to start looking for exits or to stop out on. Or if you're a long-term investor, I'm pointing out those longer-term trend lines. You can just buy down here and hold. Gold is in an uptrend, so Pan American Silver, to me, looks like it's bull flagging. So you've got this COVID low, you've got this big flag right here, flagpole, and then you're creating this big flag right here where it's really holding support. We could say down here at about 20. About $28 is where it's really holding. But this is a bigger flag, and if this is setting up, it's going to potentially run and break out to the upside. I can't even mark it out on my chart without adjusting my range, but I think this is, this is potentially setting up a move of, call it a $28 move, roughly, would be the major target. A $25 move. So obviously that puts us in, the $50 range on Pan American Silver. Now that's bigger picture stuff, and ideally you'd want to see it break the top end of the range here, a breakout above this $40 area, 40-30, and sustain. You want to sustain that breakout. That would signal the potential for this to continue to run. Royal Gold here, so we have a downtrend line, and it's downtrending. However, the RSI and the PPO, you can see here, both have bullish divergence. So bullish momentum in this one. This one's actually looks like one of the stronger gold stocks, really. It's not, it's not falling that much. Now, of course, we could wake up on Monday and have a big gap down or a big move down. But as of right now, bullish momentum, downward price action. And so we just watch these trend lines, a breakout to the upside of, again, you want to make sure it's a nice solid breakout. I would say a breakout above this 113 area. You get a breakout above there, then it's likely we're continuing to the upside. Otherwise, we just watch this downward price channel. There is some support, it looks like, down in this area at about 94.50. Down to about 90.50. That's kind of the major support zone. So if this wants to continue to the downside, run down and tag some of these support lines, that is the area that is the major support where I'd be interested in adding to a position. Sandstorm Gold coming off the 2016 lows. Here's your major uptrend or bull market. Again, you have to kind of X this one out because that's your COVID forced liquidation. And you can see we're downtrending. We're coming down into this, what looks like a support zone right down in this area. We have bullish divergence right now on the RSI and the PPO. As prices continue to work their way lower, they're diverging from momentum. So again, I'd be looking for a breakout to the upside of this upper price channel, and coming down into major support down here at like 589 down to 560 is kind of the major support. So it's not too much further down. I think from where we're at now, that's potentially a drop, 10% more downside. But again, you want to measure risk reward. If there's 10% downside and we break out to the upside, just going all the way to the highs, let's say you wait till this area to buy here, that's a potential 80% run just back to the former highs. So risk reward is good, especially if you can get it down in this major support area. So it's approaching that area now. Yamana Gold, AUY is a symbol. So I've got this downtrend line right here from the 2009 area, and you can see it. This thing held support through here, held support here, and then it finally broke, and then it was resistance back in 2016. Resistance again right there in 2020, and then we've broken out again to the upside. So breakout, held support, and we're just, we're testing that support again. So that is support. We're slightly below it. But again, this is not a plunge. Usually when you break support, you look for a trap. Whether it gaps down or impulsively sells off and leaves a big red candle on a breakdown. That's what you look for, a breakdown. This is, to me, looks more like stop running, where you're just slightly below it. You're not really impulsively breaking down. You're just kind of hanging out below it. On this one, I'd look for a recovery of this trend line of about 450, we'll call it. And if the price can recover and hold above it, then likely this was just a stop raid. So watch for that. Otherwise, if it's going to break down, you'll see it. It'll continue to, impulsively break down. No bullish divergence on this one. It's just not there. So this thing might want to, bounce and then kind of undercut the lows and put in the bullish divergence. That's something to look for. But right now, we're at major support. Newmont Mining, this one doesn't have the same kind of look when it comes to finding support. There is a range right about here that was, it's right about there. That was some resistance and support. It was support back here in 2012. And then it held as resistance right there. Again, we broke out, but that's a ways down. One thing to look at right now is we do have bullish divergence right there. You can see there on the RSI and the PPO. And recently, we made a slightly new low right here. So this was the former low right there at 56.78. And we recently, just this week, undercut it down to about 56 bucks. But then the buyers were there. You can see the tails or the wicks. Every time it got down there, they bought it. The buyers were stepping in and buying it. So again, that held as support. This is the support area at about 56.75, and we did put in bullish divergence. So I'm looking for this to hold and move up to the upper end of the price channel, up at 72. Goldfield GFI. This one has a little bit. This one's not as bullish looking. We have this upward price channel from 2018. Lots of reactions along this price channel. We recently broke. Now it's not impulsively breaking down yet. It's just back testing from below. There is bullish divergence. It's not confirmed. Obviously, if this goes lower, it's going to burn through this divergence, and we're going to make a new lower low in momentum. But it is there as of right now. I'm not interested in this one unless it can bounce up and recover this broken support line and meaningfully recover it. If it can't do that, it's trading below trend, so I don't like this one as much. Okay, so that's a pretty in-depth analysis of some gold miners, just something to look at. A lot of them look like they're at support. Now, again, when we're at key areas like this, this is the area where you'll find out if you're right or wrong. But it's an objective area to, these are objective areas to go long these miners. I pointed out the levels. It doesn't mean it's going to work out, but it's the lowest risk area to go long as of right now. So if it doesn't work out, You'll know when you're wrong. You can be wrong small losses. And if you're right, obviously you got a good entry. So that's all I got, guys. Everything in the channel is just my opinion, not trading advice. Leave me a thumbs up. Check out my trading course. Link is in the description below. And I'll catch you guys on the next video.